Good afternoon, traders. I'm Michael Sabo, Senior Market Strategist with RJO Futures, here on Wednesday, April 15th, bringing you some commentary here in the energy markets and what a day it has been so far. Currently, May crude oil is up a little over $2.60 a barrel. We're trading around $55.90. That's after just hitting recent highs of around $56.05. That's pretty much, we're about a 5% move higher here. So pretty big day in the energy markets. Nat gas, it's up about 8.5 cents. It's about a 3.5% move. Looking at the complex, RBOB's up about 7.25. The heat's up about 6.25. So really just a powerful move higher here today. And you know, one of several factors that are affecting the market here today. Let's get started here with one of them. EIA data was out here this morning, and although we saw, you guessed it, another build in the stockpiles, it was smaller than what the trade was looking for. Most traders were expecting to see a build of about 3.3 million barrels. The build came in at about 1.3 million barrels here, so a little bit smaller than expected. That's what was yesterday. The API data was reporting kind of the similar thing, that they're looking for a build, but a little bit smaller than anticipated, and nonetheless it's helping have a positive impact on the market. Also, what I want to talk about is take a look at the refinery capacity utilization levels. I mentioned this in a couple of the of these posts here. You know, at the refinery level here, we're seeing pretty strong demand here, and that's evidenced here. If you look at here, year over year at the refinery level, it's up about 3.5% here. So the capacity utilization levels at the refinery level are running at a little bit higher here, 3.5% higher than year over year here, suggesting to me here that demand is still looking pretty strong here. When you look at the demand here for RBOB, and the stocks for RBOB here, which have been a little bit on the smaller side, I think that's helping obviously add a positive tone here to the market. In addition to that, the U.S. dollar here is a little bit weaker yesterday, and it's a little bit weaker here today, so that's helping, I think, supportive here to the market. 2015 demand outlook for the remainder of the year has been revised slightly upward, suggesting seeing some stronger demand. It's also expected here, coming up in May, that we might see a little bit less oil production. So again, all these factors, all these fundamental factors kind of working together here, helping add a little bit of support to the market. Looking at some of the geopolitical risk, which I think is being built into it in the way of fear premium. We still have problems going on in Yemen, where the Saudis are doing some strategic missile strikes. So, you know, those things, that always has a potential here to flare up and develop into something a little bit bigger than what it is. So I think that's adding to a little bit of a fear premium. When you take a look at the chart here, May crude oil, you know, look at the price action here since a month ago. It's been very positive in my opinion here since mid-March here. The market has rallied up. We've seen some pullbacks in the market. We've rallied up again to make new highs with some pullbacks. We're rallying up again now, and we're actually pushing up against highs that we've seen here in February. And if the market is successful in breaking this level, we could be targeting the 200-day moving average, which could be putting oil up around the $60 barrel area. Check out the eView, the commentary that I wrote here in this month's eView here, which was actually put out yesterday. Went into a little bit more detail on some of this. But all in all, I think that, you know, while I'm not a major bull on the market, as I mentioned in a lot of these prior posts, I think traders should be cautiously looking at the long side of oil. And I still believe that's the case here. But always be cautious. At this area that the market's trading at right now, we could start to find a little bit of resistance here. The market could be due for a small pullback. If you'd like to get into more details and learn how you can take advantage of the market, feel free to give me a call or shoot me an email. Futures and options on futures may involve substantial risk and may not be suitable for all investors.